In South Africa, consumers have been forced to readjust their monthly budgets after the South African Reserve Bank, SARB, hiked the repurchase rate by 50 basis points on Thursday. The 50 basis point rise in the repo rate means that the repo rate will now be 8.25% and the prime lending rate will be 11.75%, up from 7.75% and 11.25% in that order. It is the second 50 basis point hike in a row after the SARB unexpectedly increased the repo rate higher at its meeting in March. South Africa's Reserve Bank Governor Zak King announced that the rate hike at the bank's third Monetary Policy Committee meeting of the year. The Reserve Bank has raised interest rates by 425 basis points since November 2021, with the most recent increase taking effect on Friday. This will result in mortgage loans and other interest-linked loans increasing. Now, joining us to discuss this further is a registered debt counsellor, Zak King. A warm welcome to you, Zak. Thanks for joining us on NCP Continental Prime.
Yeah, thank you for having me.
Now, Zak, many South Africans are dealing with debt. How will the latest interest rate hike affect households?
Well, it's not unexpected. We were anticipating this increase, but a lot of consumers have been left reeling. The 50 basis points is a bit higher than we hoped for, and it is, as you mentioned, the latest in a series of increases. Now, currently, there are about 19 million credit users in South Africa, and they're already taking strain. About 42% of them have what we call impaired reports, so 8 million people are skipping payments each month, or perhaps as many as 3 months behind. And the average South African is using 65% of their income just to make payments towards their debt, leaving them with 35% to spend on groceries and transport and data and other forms of shopping and expenses. And that's not a lot of money. So increasingly, people are feeling the strain, and this big increase now is going to have a serious impact. It puts the interest rates at a 14-year high, and those particularly with home loans, they're going to feel it the most. Home loan installments recently have gone up over the last 12 months by almost 40%. So people are feeling it when it comes to that. And when you've got more debt, well, it has a knock-on effect. It increases your reliance on your existing credit. So consumers who have credit cards, who are using loans, overdraft facilities, they're increasing their use of those facilities, and we're beginning to see more defaulters. And this increase now is going to probably push more people into default. Already over the last 12 months, we've seen about a 15-16% increase in new defaulters, so people who were paying and suddenly have stopped paying, and that's going to increase now with this rate increase, which is also going to have another knock-on effect. Businesses are going to start to feel it, because when you've got less money in your pocket, it means you're heading to the shops less, you're eating out at restaurants less. Businesses are going to feel the pinch as well.
There's a ripple effect. Now, Zak, one of the big issues is unsecured debt, which are short-term loans. Are people trying to use these kinds of loans to survive day to day?
Absolutely. South African consumers love loans. They're making good use of loans. But we're seeing a real increase in that. And particularly over the last 7 years, we've even seen the percentage or the amount that's been borrowed increasing dramatically. So the average loan these days, compared to 7 years ago, is about 33% larger than before. And essentially, we have two common types of loan usage here. Nowadays, we're seeing increasingly people accessing bigger loans, and those are repaid over longer time periods. So that's perhaps was time periods where people would pay back a car before, and now they're paying off just a loan. And then we're also seeing the increase in people who are taking incredible strain, who are accessing very short-term loans. So these are maybe payday loans, which last a few days or a few weeks. They traditionally have very high interest rates, so it costs people money to use them. And of course, their initiation fees. People are starting to get caught in a cycle of borrowing money just to make it to the end of the month. As soon as their salary comes in, they repay it. But a few days into the month, they're starting to feel the pinch again, and they're running out to borrow money again. And each time they're subject to those fees. it's creating something of a debt spiral that is rather hard to break out of.
Now, talking about this debt spiral, Zak, once in a debt hole, it can be difficult to get out. How can people avoid being over-indebted?
Well, I would like to say that the three common forms of advice you get are earn more, spend less, and get professional help. But I think we've all tried to earn more. We would love to do that. Mm-hmm. We've all tried to spend less, and that's challenging these days. And professional help, well, finding someone you can confide in or someone who's a professional is really helpful. But the key is to try to reduce your dependence on credit. And that's not an easy thing to do. Most of us slowly increase our credit use over time. So to turn the tap back and slowly use less and less is going to be a slow process. One of the weaknesses many people have, and I think it's not just in South Africa, but it's worldwide, is telling your money what to do and where to go. So few of us actually are in the habit of making a budget. We're not often trained in how to do that, or we don't do it very regularly. And so increasingly people just rely on credit because you don't plan your spending, you just use your credit. Or maybe you have a blind hope that things are just somehow going to work out or improve instead of making a plan on how to do that. And I would say it's a very big warning sign if you start to use one form of credit to pay for another form of credit. If that's happening in your life, you're in serious dangers financially. You're right on the edge of that pattern. And it's better to look for a side hustle, something that can earn you a few extra bucks along the way, or to make better choices.
Now, Zak, the cost of living seems to be increasing steadily. What are your clients telling you about their biggest challenges?
Well, over the past few years, salaries have slowly been increasing. In fact, during the pandemic, there were some periods of time where there were no increases whatsoever. But at the same time, the buying power based on the South African rand has slowly been shrinking, and inflation has been going up. The result is that over the past 7 years, people are basically 40% poorer or have 40% less buying power, even if they've been getting increases in their income. Now, at the moment in South Africa, we're talking about load shedding. As you mentioned, it's a big thing, the electrical supply. But one of the things we don't talk about enough is the price of the electricity that we are using. And here in South Africa, we're moving into winter and we're feeling the pinch. Over the last 15 years, there's been a 650% increase in electricity prices. Last year, there was a 10% increase. This year so far, there's been an 18% increase. Consumers are talking about that because they feel that. Food prices are up compared to last year by about 14%. So it's tight. It's getting tight.
Very tight indeed. Thank you very much, Zak King, for your insights and contribution. Thank you.
Thank you.